Sorry for the technical glitch, guys. So, I hope I'm audible now. So now that we have discussed about the earlier concepts of IND AS 116, which dealt with the overview of the standard, we also dealt with whether an arrangement contains a lease or not. We also looked at the significant terms which we're going to use as far as your recognition and measurement is concerned. Now that we have done with this part of discussion, we'll get into the main concept of the standard. The essence of the standard lies in your recognition and measurement. Now the entire discussion till here is of no use if you people are not able to get the recognition and measurement. So that will be the fundamental point of discussion is regarding your recognition and measurement. Now if you remember a particular place in the standard where I told you that the objective of the standard is only to alter the accounting treatment of the lessee and not the lessor. So if you keenly remember what we discussed or what you had read under AS 19 or IND AS 17, I hope none of you has actually read IND AS 17, but IND AS 17 is a true replica of AS 19. So whatever you learnt as per AS 19, if you quickly remember, AS 19 requires the lessee to classify the lease into operating leases and finance leases. While operating leases, there is no recognition of the asset which was acquired on a lease. The lease payments will be charged to P&L on a straight line basis. So that is making the user unable to determine their return on fixed asset, because I have no idea what is the return on fixed asset, taking into consideration that it was an operating lease and therefore the asset was never recognized in your books of accounts. So if you look at the presentation, your P&L will show revenue from operations and expenditure is the lease rentals which are paid for the operating lease. But if you look at the balance sheet is completely empty. Now, there was a very dignified person who was actually involved with the IFRS in drafting IND AS 116, a very notable person of Indian origin but lives in Dubai. He was taking a session and I happened to attend his session. Prior to the implementation of IND AS 116, I'm talking about 2017s and 2018s. And he told me the primary point, he told everyone there that the primary point of including a revision in IND AS 116 or revising the standard of IND AS 17 which contained leases is that the airline industry like Indigo, SpiceJets, Vistara, all these airlines were always acquiring the aeroplanes on an operating lease. Though they were generating revenue from operations, none of these assets were represented as or presented in the face of the balance sheet. That caused some concern because they wanted to see what is the asset based on which such revenue was actually generated. When they dug into the facts, they understood that this asset never got presented in the balance sheet because it happened to be an operating lease. So that triggered a requirement of a change. That triggered the requirement of a change, and that is where IND AS 116 started. IND AS 116 has started with the fundamental concept that we cannot have a presentation like this. If there is a particular asset based on which the lessee is generating certain income, then such an asset should be presented as far as your balance sheet is concerned. It should be presented as an asset. With that intention, IND AS 116 proposes only single accounting treatment. There is no classification between operating lease and finance lease as far as the books of lessee are concerned. It requires a single accounting treatment, and that accounting treatment is to recognize an asset. Unless that lease is classified or the lessee has taken a recognition exemption under short-term leases or lease of low-value assets. Now, short-term leases are for a very tiny period of time. Doesn't make any sense in representing the asset or presenting the asset in the balance sheet. Lease of low-value assets, immaterial. Since it is immaterial, materiality concept says it's okay even if you don't recognize it. But what about other assets? There could be other assets which, if I was not introducing IND AS 116, you would have followed IND AS 17 or AS 19, classified them as operating leases. To stop that approach, IND AS 116 has come out with a completely new accounting treatment. And this accounting treatment under lessee, in the books of lessee, is more or less a replica of what we discussed under finance leases for the lessee. Earlier, whatever we discussed under finance lease for the lessee, a similar approach will be adopted even for your Ind AS 116 in reporting or in presenting for leases. So it is more or less the same, but let's see what it actually includes. When I'm talking about classification of leases under Ind AS 116, there is no classification for lessee. For lessee, he will recognize every lease as per Ind AS 116, irrespective of their classification, unless he has opted for a recognition exemption under short-term leases or lease of low-value assets. Except for these two exemptions, all other leases will start applying a single recognition approach. Clear? For the ease of our purpose, I will break the recognition and measurement in the books of lessee into 4 parts. Initial recognition, subsequent recognition, reassessment of lease term, and modifications of lease. 4 things that we will divide it, based on which I will discuss about this concept of recognition and measurement in the books of lessee. Guys, then later on we will move into lessor, but before we move into the lessor, we have to complete this section of lessee, which includes these 4 discussions. So let's start. Recognition and measurement. We are talking about the books of lessee. This is where there is a significant change. The standard did not change with respect to the lessor. Lessor, more or less, it is still the same. So I would always say that the lessee's accounting treatment is probably the most important one in Ind AS 116. Now this recognition and measurement, I will split it into 4 parts. 4 parts of our discussion. The first part of discussion talks about initial recognition. Obviously, recognition includes even initial measurement as well. Then we talk about subsequent recognition. Generally, we assume that once we have discussed initial and subsequent recognition, the topic is over. No, the topic extends further into 2 more elements under books of lessee. One is reassessment of lease term, and finally the last one is lease modification. These are the 4 elements which I have to discuss: initial recognition, subsequent recognition, reassessment of lease term, and lease modification under lease. Based on these 4 topics, I will start continuing with the books of lessee. Clear? Remember, the recognition and measurement which I am discussing here excludes such leases which have been exempted, where the lessee has opted for an exemption under either short-term leases or lease of low-value assets. Write down that point. Recognition and measurement shall apply to all leases except leases for which the lessee opted for recognition exemption We have discussed about this recognition exemption. Recognition exemptions under. The first one of such recognition exemption was regarding short-term leases. The second one of such exemption is regarding lease of low-value assets. Except for these two leases, where the lessee has opted for an exemption, I would apply the recognition and measurement criteria to all the other leases except for these which we have already discussed earlier. Clear? Now let's talk about the first concept. The first concept under recognition and measurement is initial recognition in the books of lessee. So let's start with the heading of initial recognition. When I talk about initial recognition in the books of lessee, I am not bringing in the books of lessor yet. I'll talk about lessor at a later point of time. I am talking about lessee as of now. Initial recognition in the books of lessee, I will start recognizing two items. My initial recognition is particularly with respect to two items. The first one is called as a lease liability. That is the first recognition. The second recognition is for an ROU asset. An ROU asset is nothing but right of use asset. So I am recognizing a liability and I am also recognizing an asset. Both of them together should be recognized initially whenever you are recognizing a lease. Now, how do I measure that? How do I measure a lease liability? How do I measure an ROU asset? In a simple essence, if I am recognizing both an asset and a liability, what is your entry that you will record? ROU asset account debit to lease liability over. Then how do I measure this lease liability and how do I measure this ROU asset? Let's start discussing about lease liability first. When I talk about lease liability, the lease liability should be measurement present value of lease payments present value of lease payments paid by lessee to the lessor from the date of commencement of lease. One second guys, after the date of commencement of lease. After the date of commencement of lease up to the end of lease term. Read what I have written. The lease liability in the books of lessee should be measured at present value of lease payments paid by the lessee to the lessor after the date of commencement of lease up to the end of the lease term. Now, what does these lease payments actually include? These lease payments, which are discounted to their present value, shall include all the payments which are made from the date of commencement of lease. So, particularly, it should include number 1, fixed lease payments. Number 2, variable lease payments. Which are linked to an index or a rate. Linked to an index or a rate. I told you, anything which is not related to an index or a rate, that they will not be included as far as lease payment is concerned. Guaranteed residual value. Guys, if you observe, I am accounting in the books of lessee, but the lessor can have a guaranteed residual value either from the lessee or could be another third party. But since I am looking only from the lessee's perspective, guaranteed residual value by the lessee only. Third party's guaranteed residual value. If the lessor is taking a guarantee from third party, then that amount is not payable by the lessee. Since it is not payable by the lessee, I will not include it in the lease term or the accounting for leases to be discounted. Only such guaranteed residual value guaranteed by the lessee should be included in discounted cash flows. Amount paid for purchase of asset or takeover of asset at the end of lease term. More or less very similar to the guaranteed residual value only. If you are supposed to pay a certain amount to make sure that you are taking over the leased asset at the end of lease term. Next one. A penalty for termination of lease. If it is reasonably certain that the lessee will terminate the lease. That the lessee will terminate the lease before the end of lease term. Any additional amount paid on renewal, any additional amount paid on renewal of lease, if it is reasonably certain that lessee will extend or renew the lease. These are the inclusions in cash flows which I have to consider in measuring your lease liability. What did you say regarding lease liability? It should be measured at present value of lease payments paid by the lessee to the lessor after the date of commencement of the lease up to the end of lease term. What payments do you make? I make fixed lease payments, variable lease payments which are linked to an index or a rate, a guaranteed residual value, or an amount paid for purchase of asset towards the end of the lease term, any penalty paid for termination of lease if it is reasonably certain that the lessee will terminate the lease, or an additional amount which is supposed to be paid by the lessee upon renewal of lease if it is reasonably certain that the lessee will extend the lease term. These are 6 points to be included. If you actually add up both of these, guaranteed residual value or additional amount which is supposed to be paid for purchase of asset at the end of the lease term by the lessee, these two both represent the same amount. So that means in total I have 5 inclusions as far as the lease liability is concerned. First one is fixed lease payments. Second one is variable lease payments. Third one is guaranteed residual value or the amount paid for purchase of the asset at the end of lease term. Fourth one is penalty for termination of lease if it is reasonably certain that the lessee will terminate the lease before the end of its lease term. Or number 5, an additional amount which is payable by the lessee on renewal of a lease if it is reasonably certain that the lessee will extend the lease term. Here. Now these 5 indicate cash flows. What cash flows? Such cash flows which are paid by the lessee to the lessor. A lessee pays these cash flows to the lessor throughout the lease term from the date of commencement of lease. These cash flows or these lease payments which are paid by the lessee to the lessor from the date of commencement of the lease up to the end of the lease term should be discounted to their present value. If I am discounting it to the present value, then I have to look at what is the appropriate discount rate at which these cash flows are discounted to their present value. We have already discussed about the discount rate. Discount rate is interest rate implicit from lease if not available. If you cannot identify the interest rate implicit from lease, alternatively I can use incremental borrowing rate. Both of these rates I have already discussed. I have discussed both of these rates. What is interest rate implicit from lease and what is the incremental borrowing rate? We have discussed both of them. If you remember interest rate implicit from lease, we said interest rate implicit from lease is the rate at which the present value of lease payments together with the unguaranteed residual value is equal to the fair value of the leased asset plus initial direct cost paid by the lessor. You continuously start talking about interest rate implicit from lease from the perspective of the lessor itself. Therefore, it may not be available to be used by the lessee. In such cases, the lessee can alternatively use an incremental borrowing rate. What do you mean by incremental borrowing rate? The rate which is used if interest rate implicit from lease is not available. It is the rate at which a lessee can borrow funds. I can borrow funds to acquire a similar asset which I am right now taking on lease. If I want to purchase that leased asset, then what rate should I borrow funds? Now that rate, if it is based on the same term or a similar term and based on the similar security which is offered, then that rate is called as incremental borrowing rate. Instead of taking this particular building on lease, if I go to SBI, provide a project report and ask him to give me a loan, then SBI has pursued everything. He looked at what is the property that you are buying, what is the consideration that you are paying, what is the loan which are required, and then they will conclude based on the security and the lease term or the term of the lease. they will conclude what is your rate at which they can lend the borrowing. Such rate at which you can lend the borrowing is called as incremental borrowing rate. The rate at which you can borrow funds to purchase the leased asset or to purchase a similar asset upon a similar term based on a similar security. Such rate should be called as incremental borrowing rate, which can be applied for identifying present values of cash flows if your interest rate implicit from lease is not available. Clear? So when I said measurement at present value of lease payments paid by the lessee to the lessor after the date of commencement of lease up to the end of the lease term, this amount shall be called as a lease liability. The second recognition which I want is what is the value of a leased asset. Remember, I told you I'll write the entry as ROU asset to lease liability. When I write the entry as ROU asset to lease liability, fundamentally I know that the entry will tally only if your ROU asset is measured at equal to lease liability. If I don't measure it at lease liability, then how will your entry tally? So that is why ROU asset, when I talk about its measurement, of ROU asset, then I will go like this. The value of lease liability plus amount paid before commencement of lease added by the amount paid before the commencement of lease reduced by lease incentive. Both of these we have seen. Reduced by lease incentives added with initial direct cost paid by lessee Why do you think in the previous session I discussed about all these topics? Because I know that I'm going to talk about all these elements in measurement. Finally added with present value of estimated cost of dismantling removal and site restoration. I'll make sure that you can see this. I'll hide myself. Yes. So this is how I'll measure it. My measurement is based on the amount of lease liability added with the amount paid by the lessee to the lessor before the commencement of lease, reduced by lease incentive offered by the lessor to the lessee, plus initial direct cost paid by the lessee, present value of estimated cost of dismantling, removal and site restoration. This part we have already discussed previously under IND AS 16. Guys, if it is required, please go back and check what are lease incentives, lessee's involvement before the commencement of lease, initial direct cost which is paid by the lessee. These three parts we have already discussed in the previous session. You can go back and check. have a good look at whatever you have written so far. In measurement of leased asset and lease liability, lease asset, I call it as ROU asset. So lease liability, I measure it at present value of lease payments paid by the lessee to the lessor after the date of commencement of lease up to the date of end of lease term. These lease payments are split into 5 parts: fixed lease payments, variable lease payments linked to an index, amount paid for purchase of leased asset at the end of the lease term or the guaranteed residual value, penalty for termination of lease if it is reasonably certain that the lessee will terminate the lease before the end of the lease term, or the additional amount paid for renewal of a lease if it is reasonably certain that the lessee will extend the lease. All these we have seen it as an inclusion in lease payments. And what about your ROU asset? ROU asset, I will measure it at the value of lease liability added with the amount paid before the commencement of lease. Yesterday we have discussed about this topic under lessee's involvement prior to the commencement of lease. Lessee paid a certain amount to the lessor for modifications of the leased asset or customizing the leased asset according to his requirements. Reduced by lease incentive. What is the lease incentive that we have seen yesterday? There are certain incentives or additional payments which the lessor provides to the lessee at the commencement date or before the commencement of lease. What are these? Number 1, relocation bonus. Relocation cost which is being reimbursed, or the earlier penalty which I had to pay to the existing lessor if it is paid by the lessee or by the new lessor, or if the new lessor is compensating me for the penalty which I am paying to the earlier lessor, that amount is considered to be a lease incentive. Such lease incentive should reduce the value of ROU asset. Initial direct cost paid by the lessee. Guys, initial direct cost can be either paid by the lessor or by the lessee. What are initial direct costs? They are costs which are incurred directly for taking the asset on lease. Commission paid to the agent, legal documentation fee, stamp duty or legal fees paid for execution of the document. All these are initial direct cost of lease which we have already discussed in the previous session. The last inclusion is like any other asset under Ind AS 16 or 38 or 40. I would have added this concept of present value of the estimated cost of dismantling the asset or removal or site restoration. The same thing I am adding even for an ROU asset under Ind AS 116. So just for our clarity, let's write down the entry that we get. ROU asset account debit. We have seen the measurement as discussed above. Bank account debit. I might receive a certain amount as incentives from the lessor. These incentive from lessor. So I am debiting it to the bank account. I am reducing it from the value of the ROU asset. 2. Lease liability. We have discussed about how do I measure the lease liability. It is present value of lease payments from the date of commencement of lease term up to the date, from the date of commencement up to the date of end of lease term. to bank. Sometimes I might make additional payments. What are the extra payments that you make? The extra payments which I make is towards initial direct cost, or towards payments prior to the commencement of lease. Before the commencement of lease, I could have made some payments for modification of lease, for the modification of the leased asset, or could be in the form of a certain amount of deposits. So all these will be included in the value of leased asset. What I'll exclude from the value of leased asset is the amount of lease incentive. This is the entry which I will predominantly record whenever I'm initially recognizing the lease. Now question comes up. When should I recognize this entry? Should I recognize this entry at the inception of lease or at the commencement of lease? The answer is this should be recognized on commencement of lease. I'll have to make sure that we are recognizing this on the date of commencement of lease. Yesterday we discussed about in the previous session the difference between what is an inception of lease and what is a commencement of lease. So the entry should be recognized in your books of accounts only on the commencement of lease and not on the date of inception of lease. We have seen a lot of places where the inception of lease also is used, but here it is commencement of lease on the date on which we start recognizing this particular entry in the books of lessee. Here, we are not clear until we take an example and try to look at it. Take an example, try to look at it, and that is when you will say, yes, I got it. But remember guys, one more last point which I'll add here is provision for dismantling removal and site restoration. Dismantling, removal and site restoration, and that is the comprehensive entry that we will record whenever there is a commencement of lease. This amount of provision which we are going to recognize, it is very similar to what we have done under IND AS 16 or 38 or IND AS 40. We have discussed it there. How do I consider it? How do I recognize this amount? How do I measure this amount? We have already seen it. So the same value of dismantling, removal and site restoration should be added to the value of ROU asset. Fine. If you are done with this entry, ROU asset account debit to debit, bank account debit for lease incentive to the value of lease liability, to bank for initial direct cost or payments made prior to the commencement of lease, to the provision for dismantling, removal and site restoration. This total entry is to be recognized in the books of the lessee on the date of commencement of lease. Let's try to understand with the help of an example. Let's say lease payments are structured like this. My fixed lease payments are I'm just taking some random numbers. These lease payments are paid at the end of each year. Apart from these lease payments, we also have prior to commencement, prior to the commencement of lease. Let's say I paid rupee 20,000 for lease modification. For lease assets modification, I paid 20,000 rupees. Okay. Let's say I have a lease incentive of rupees 6,000 for reimbursement of relocation cost. It's just for relocation, for shifting from the old lessor to the new lessor. Lessor is offering you 6,000 rupees. These are lease incentives paid by the lessor. My estimated cost of dismantling discounted to present value let's say this amount was another 3,500. Let's say my IRR or interest rate implicit from lease, or let's say the incremental borrowing rate to the lessor, for the ease of calculations, I am taking this rate as 10%. Becomes easier for us. If these are the conditions which are given under the question, obviously it will not be as simple as I've written. Obviously, the numbers will be much more complicated. I understand. But just for the purpose of ease, I'm just taking certain numbers so that we recognize. Let's try to first determine determination of lease liability. Lease liability is present value of lease payments made after the date of commencement of the lease up to the end of lease term. So let's start writing it down. Here, cash flows, discount factor at 10%, which is your incremental borrowing rate. Finally, the discounted cash flow, which shall be considered as my lease liability. Year 1, 2 and 3, only 3 payments made after the lease term. After the commencement of lease, throughout the lease term, I made only 3 payments. Those 3 payments are 10,000, 12,000, 15,000. What is your discount factors at 10%? 0.909, 0.826, and finally 751. These are paid at the end of each year. Multiply with the discount factors to get what is the discounted cash flow. These are cash flows paid after the commencement of lease. So first one, 9090, 12,000 into 0.826, 9912, 0.751 into 15,000, 11265. A total of all these three, look at it, 9090 plus 9912 plus 11,265, 30,267. This is the value of my lease liability. Then what is the value of the leased asset? Value of lease asset or ROU asset. Right of use asset. Calculate. How do I measure it? First, start with value of lease liability. We already know the value of lease liability, which is discounted cash flows of all payments made after the commencement of lease, 30,267, plus amount paid prior to commencement of lease. Before the commencement of lease, I paid for the modification or for the customization of the asset, I paid 20,000 rupees. I have given it above. Prior to the commencement of lease, 20,000 rupees paid for modification of the asset to suit the requirements of the lessee. Minus the amount of lease incentives. I received a lease incentive of 6,000. Writing everything in rupees terms, guys. Finally, I will add present value of estimated cost of dismantling, finally this cost which should be added is 3,500. So this should be reduced, rest all added, get me the final answer. $47,767. Correct? Record an entry now. Record an entry on the date of commencement of lease. ROU asset account debit. 47,767. To lease liability, these two I have already determined. What is the amount of lease liability? The amount of lease liability is the amount which I have already presented above, 30,267. 30,267. Entry did not tally. Why? The entry did not tally because there were certain other adjustments also. To the extent of debit, I need one more debit, bank account debit for the lease incentive which I received. What is the lease incentive which I received? Lease incentive, debit the bank account which you collected it from the lessee, 6,000. Further, to bank account. Why again payment of bank? I paid for lease modification. For modification of lease terms, for modification of leased asset prior to the commencement of lease, or modification of ROU asset before the commencement of lease, I paid 20,000 rupees. Additionally, one last item which I have to record is provision for dismantling. The provision for dismantling, removal and site restoration, another 3,500. Now look at it, the entry will perfectly tally. Now you look at it, entry will perfectly tally. I just hide myself so that you can see the answer. This is the entry that we're going to record for recognizing the leased asset. I hope most of you have got it. So with that, I come to the end of initial measurement and initial recognition of lease under the books of lessee. But guys, we also have to discuss about subsequent measurement and subsequent recognition. How do I present these items in the balance sheet? How do I recognize these items subsequently on each balance sheet date? We'll have to discuss about that. What are the items which I have to charge to P&L? What are the items which I will transfer it to the balance sheet and continue in the balance sheet? We'll discuss about these items as well from now.